Yo, 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 yo. What it do, what it do? It's your boy Johnson right here. And today we're going to hit up some long-term market analysis. So we can go ahead and just close the year. And yeah, let's get right into it, man. Let's get right into it. So I'm going to be analyzing a few things today. The Euro USD, the gold market, the oil market, the NAS 100 indices, the pound yen, and we're also going to look at Bitcoin. We're going to look at Ethereum. We're going to look at Ripple. We're going to look at the USD ZAR and, excuse me, the dollar index. So yeah, baby, let's rock and roll. We're going to start things off with the gold market. So right now I'm just looking at things 100% technically. I know there's a lot going on with the coronavirus. However, uh, all information has already been discounted into the price. It's priced in by the market. Uh, that's part of the market efficiency theory that all available information is available and has been priced in. So let's get the show on the road, baby. Now we're only doing long-term analysis here, so this is basically what's going to be happening or what we're anticipating for basically the whole of the second quarter of 2020. So this is a 3 months analysis just based on the markets that I mentioned earlier. Gold, NAS 100, oil, pound yen, euro USD. We're going to look at the USD ZAR. We're going to look at Bitcoin. We're going to look at Ethereum, and we're going to look at Ripple. And then to top it off, we're going to look at the dollar index. So yeah, baby, let's rock and roll, man. So this this is the gold chart, and gold has pretty much been uptrend since 1998, and then it peaked out in uh, so 98. Gold was trading at $250. 1998, gold was 250 an ounce. So I'm just gonna round things off here. And then between 1998 and November, okay, let's say about 2010, right? Till the end of 2010, right? Let's say towards the end of 2011. Towards the end of 2011, gold hit a high of 1,900, right? And then from there, that's when we started to see gold prices decline, and they fell for almost 7 years, basically, from 2011 or 6 years, 2011 to 2017. We saw all of this, and 2017 came and prices started to pick up again. So this level, the 1,000 level, was very significant. Levels of demand caused gold prices to start moving up again. And then we had this go on. Price broke out early last year, 2019, and we've been seeing price move up ever since, right? And the next level of defense is this 1,800 level, 1,800. And then the all-time high is 1,900, which we've seen hit in 2011. Will we hit that again? I don't know. But what we can do is definitely plan for it. We can most definitely plan for it. So just looking at the chart like this, um, yeah, man, the computer's all the way up there. Well, computer's here, Mouse is here, but then like the screen is up there, and I'm just looking at it laid back and whatnot. And I'm analyzing the gold market, yo. Um, on a monthly basis, this thing has been moving up, and it's still been moving up. So one of the things that I like to do when it comes to analyzing any market is I always start with the monthly charts and see what's cracking on there, man. And right now, what's happening is on the monthly, price is moving up. And then let me just explain right quick exactly how I analyze the market. So I use a 21 exponential moving average, and that's red. So that's the red line on my chart. And then I also use 100 exponential moving average, which is the orange one. And I also use 8 moving average, which is the black one. Um, Black. So these are 3 indicators uh, that are on my chart, and this is what I use uh, generally throughout all my setups, my charts. And the reason why I like this is because it tells me trend. It tells me trend, and I'm just like, yeah, man, I like trend. So if price is above the 21 EMA, it means the market is bullish, right? If price is above the 100 EMA, it means that price is bullish. Price is above the 8 EMA, it means price bullish. So when all of these are bullish, right? Um, right. So when all of these are bullish, it's an indication to buy, right? And then similarly, if we go to a bearish market, which we'll do later, if price is below the 21 EMA, then price is bearish. How do I change the color of this one? All right, let me do this. If price is below the 21 EMA, price is bearish. Price is below the 100 EMA, price is bearish. Price is below the 8 EMA, price is bearish. You can call it price, you can call it market, right? So basically, the 8 EMA zooms in on what's happening in a shorter time frame. So this will be the previous 8 months, whereas the 100 EMA would be the previous 100 months. In the 21 EMA, it's calculations based on the 21 previous months, right? So these two help us see the direction of the market, and these two help, and this the 8 EMA helps us see what price is doing. Uh, so one helps see basically the general overall direction of the market, and the other helps uh, see the general direction of price. So the reason I'm explaining this so that when I zoom in and when we go into this, um, everything kind of makes sense basically. So yeah, let's zoom in, man. Let's zoom in. Right. So this is it. We have determined our bullish market. Price is trading at $1,607 an ounce. And as you can see here, the moving average is trading at 1,272. Is price above the 100 moving average? Yes. This market is bullish on a long-term basis. On 100, uh, based on the last 100 months, this market is bullish. Okay, cool. Price is still trading at 1,607, and the 21 moving average is trading at 1,410. Right. So what this tells me is that price is bullish based on the last 21 months. So we can say just under 2 years, this market has been bullish for the last 2 years. And we know that gold can be bullish for years. So far, it's been bullish for the last, uh, say, 100 months. And if we look here, price is bullish from 2001 to 2011. That's 10 years. So if this were to continue bullish for another 10 years, where would this put gold? You know, with this 1,900 level hold? But anyway, let's not get ahead of ourselves. Let's get back into just breaking this down piece by piece and looking at it technically. We are looking at this purely in a technical perspective. So let's analyze this market and let's keep it 100% technical. 100% technical. No emotions, no opinions, just reading price. Just reading price. Yeah. And I have, you know what? Let me go ahead and just clear everything right now. Just, getting ready for the second quarter. And let's just get rid of everything here and just look at this from a fresh perspective. So the first thing that I like to do is I like to identify the extremes. So I've identified the trend, and right now I've zoomed into last month, and I'm gonna go ahead and identify last month's high. Right, that is the previous month's high. Now this is how I analyze charts every single day. So previous month's high, and that's this level here, 1,689. And we're also going to look at last month's low, right? Last month's low was 1,546. So that's cool. We've got information, right? We got direction on that information. We know what the high was, we know what the low is, and we know where we're trading right now. Right now, we're trading 1,609. However, we know that price has broken last month's high and price has broken last month's low, all in this month, in the month of March, right? Cool. We have got information. And I also want to identify if this thing were to continue going up, where would it continue going? And I would look at my next level of resistance, which would be up here. This would be my next level of resistance. And this is where I'd see price trading to if it were to break this high again. So if it were to break this high, I would expect it 1,800. Right now, if we do get there, that's Jim and dandy. And if we break that, where's the next level that price can go? And this is my level right here. This is my level right here. So this is a significant level, and this is that 1,900 level. If price were to continue doing its thing, this would be it. So now we have identified levels of respect, levels of interest. Now, if price were to come down, where would I anticipate this thing coming down? Well, I'll look at this level. However, we have already done that. This is a level of interest. And if that doesn't hold, this would be a level of interest. And I haven't even put any trend lines in this, but we can go ahead and do that. The reason why I haven't put any trend lines is because we have the moving averages telling us what's happening. And yeah, if I had to go and do a trend line, it would look something like this. Trend line would look something like this. Been trending since 2001, and now it's 2020, 19 years later, and we're still in the bull market. See, all right, now let's get this out the way. Clouding up the chart, right? And we've identified this. Now, is this information enough to take a trade on this? We've identified that we want to buy, direction is up. We only want to trend with the trade with the trend. Well, sure, for some it would. If you're gonna buy this and like come back next month and have a look at it, that's cool because you're trading the monthly chart. However, managing your risk on these long term charts is a bit tricky unless you have the size or you you basically you need to give the trade room to breathe because I mean even though it might end up here next month, we don't know what's gonna happen on the way, you know. Could come back down all the way down and then maybe range here and then go up. And we well, I don't want that much exposure when it comes to risk. I would like um, my stop distances to not be so wide, but wide enough for the market to play out, and wide enough to let me know that, hey, I made a wrong call if I made a wrong call. I don't just want to be stuck in this thing while it's doing that, you know? So in order to do that, I need more information. How do I get more information? Drop down to the weekly chart. Weekly chart is telling me a story. Weekly chart is telling me that first things first, price is above the 100 moving average for the last 100 weeks, right? Price has been bullish, and that price for the last 21 weeks has still been bullish. So this is me just reading the moving averages. And then the weekly chart is also telling me that although last week price was very, you know, it had broken it, well, I don't want to say breaking its trend, but it broke its moving average, and price came below. This was bearish signal for some, and we did see price move down. Price moved down for the last 2 weeks. It hit a low of 1,450, which is just above this moving average here. So there was support here, and we can also see the support that we dragged across from the monthly chart. Sweet. Now, next step that I do, I got my direction. Price is above all three of these moving averages. Great. Now, next step, identify my extremes. So what I'm going to do is I'm going to identify last week's low and last week's high, right? So this is previous week's high, and we're going to make it a little bit thinner. And this over here was last week's low. So on the weekly chart, this is what we've been told. We're being told that last week's price made a lower low than the previous week, right? Made a lower low and a lower high, and it was trading below the 8 moving average and the red moving average, which is the 21 moving average. And then we also get this information of what's happening right now. What's happening right now is that we have broken last week's high. So we have made a higher high and we have made a higher low, which is very, very, very interesting news, because ideally all we're looking for in a bullish market is higher highs and higher lows. So what that means is we're just looking for something like this: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Buy the higher low, pick it up. Buy the higher low, pick it up. Right. So this is what's happening right now. This is what's happening right now. Just breaking this down. Simple, simple, simple. Okay. Now we got our bullish trend. No, it doesn't look so great. There's a straight line going up. Right. Gold green. Higher high, higher low. This is the higher low. This is the higher high. This is the higher low. We didn't make a higher high over here, and that was interesting. And as you can see, price failed to break this level here for a whole year. It hit this level and it came down in 2017, 2018, came down. And we came here, but we didn't get down to this low here. So we formed a higher low. So bulls got in there and we faced this challenge again, this level here. And price retraced for a few weeks when it got here. And it retraced from about March till about, I don't know, June or something. And then we pulled back, we got this higher low. We pulled back to the 100 moving average. We pulled back to the 21 moving average. And then we broke. We broke this and it was just lift off. Lift off, we made a higher high. Pulled back, made a higher low. We made a higher high. We pulled back. Some would argue this is a higher low. I would. And now we're moving up. And right now we are here. However, we're anticipating this high break and then just let it rip. And then just let it rip. So direction is clear. Uh, for more confirmation for direction, we can just go ahead and see before we want to do any funny things like taking trades. We want to know what we're actually doing, right? So this is a trend line. I'm just emphasizing that there is an uptrend going on here, right? There is an uptrend going on here, and price has been respecting the trend. And if we look at this, we've got that going on, right? There is a trend going on here, so that's great. Now, weekly chart. Is this enough to take a trade? Is this enough information to just go ahead and click the buy button and then just go boom? Sure, you could do that. Jam this, keep your stop behind the 8 moving average, keep your stop behind the 21 moving average, even keep your stop behind this major support level. And if you want to really be safe, keep your stop behind this moving average. Keep it down here. And you're good, man. Let this ride. You know that it has a potential of getting all the way up here. And that's great. Because that's a lot of meat on the bone, right? Now, the way I trade, I would like more information. I mean, unless I'm taking a position trade on this or like a long-term swing, I'll just get in at this market. Manage my stop, like I said, either behind the 8 moving average, either behind the 21 moving average, or behind the 100 moving average. Sweet. So, this our weekly chart, and to really actually trade this efficiently and effectively, I would like more information. And I would do that by going one step further and dropping into the daily chart. Right? I already know on a monthly basis this thing is moving up. I already know on a weekly basis this thing is moving up. When I get to the daily, I only want to look for confirmation that this thing is moving up. Right. Now, back to how we roll in this. Is price above the 100 moving average? Yes. Is price above the 21 moving average? Yes. Is price above the 8 moving average? Yes. By definition, technically speaking, this is a bullish market, right? Now, how do we trade it? How do we make money? All right, we got to do one more thing. We got to identify our extremes. So what I'm going to go ahead and do right now is I'm going to identify my highs and my lows for the previous day. So previous day high, and make this a little lighter. So the thicker the line, the more potent the level of the spread, right? And then we had yesterday, which was just opened up and just kept ripping it apart. The low of yesterday, low, previous day's low, right? So this is it. We have got everything we need to make a decision. So what kind of trader are you? That's how you will determine whether when you'll be buying or what conditions need to be met in order to buy. So if you're a momentum trader, you're just looking for this thing to break this and keep moving up. And this would be your target right here. Right here. Momentum, jam your stop, and when price gets here, you take profit. Simple. Or you can simply trail your stop all the way um, until the level that we've identified, which is up here, 1,800 or 1,900, right? That's one way of going about it. You just want to trade the break and let it keep moving up. And another setup you could play is let this thing pull back to maybe the 21 moving average or the previous week's high, gold reversal type setup, and buy it down here, the higher low, and simply let it ride, man. Simply let it ride. Let it break this previous high, and just let it ride. We have this as first target. Second target is 1,800. Third target, 1,900. And if it breaks that, it makes things even more interesting. Because we don't know how long this thing could be bullish for, right? So basically, that is my analysis long term on gold. And right now, I'm just gonna zoom out a bit and check it out. So yeah, this is the chart. We're playing it to the upside. We're bullish. We're long. So up, 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 up. The bias on this is up. The bias on this is up. This is our next step. You know, if this level holds, and well, and it holds. We're looking at this level number one, and we're looking at this level number two. So target one, $1,800 an ounce of gold. Target two, $1,900. $1,900 for an ounce of gold. So yeah, that's my analysis on the gold market long term, keeping it short and simple. Literally just analyzing what the market is giving me and uh, reading price action, just reading price action. And this is what the market is telling me. Right now, price is trading at $1,615. So it's up about $6 since we started this video. And yeah, man. Yeah. Gold market, long and strong, baby. Long and strong. And now let's have a look at our next focus, which is the, the oil market. Oil market. Oil synagogues are all over this market, though. All over this market. Right. So what's happening, man? Right. Oil. Let's check it out. Let's check it out. Let's check it out. Let's check it out. Oil market, yo. This thing dropped 50% just 2 weeks ago. Freaking insane, man. Freaking coronavirus. Super insane. So, what is this market telling? This market is telling me that this thing has a triangle thing going on. So, there's all of this, and there's all of this. But, you know what? Let's clear everything and look at this with a fresh pair of goggles. Fresh pair of goggles. So, this is the market right now. Oil market trading at $24.19. The highest it's been is $145 a barrel, which was in 2008, and the lowest it's been was $11, which was back in 1999. All right. 1999 was the lowest, with $11 a barrel. Sweet. So here's the high over here, 145. And here's the low over here, $11. And what happened in the previous week is not even the previous week, more like the previous few years. Um, After we hit the high in 2008, like it gave back all those gains from 145 to $33. In the space of, let's check it out, just about a year. All right, that's interesting. Um, and we know why that happened. Great Depression of 2008. Um, and yeah, let's get that. Let's get technical. So first thing, first thing to identify always is to identify the extreme for the previous month and identify the extreme for the previous week and the extreme for the previous day. So if we look there, we'll see that $54.50 is the high of Feb. So that's the previous week high. And then the previous month high. Not bad. Not bad. Previous month high was $4.50. And the previous month low was $43. Previous month low was 43 bucks a barrel. And if we look at the market moving averages, prices below the 100 moving average, which is still lagging, still at $63. And 21 moving average is at $56. And the 8 moving or 6 moving average on this chart go ahead and identify the levels of supply and demand. But on this chart, I'm really only going to focus on supply. We're in a downtrend, and next level of defense is 16 bucks, 17 bucks, I think. And oh, no, other level is $11. So for the oil market hit $11, I don't know. But this is the lowest that I can see on this chart. It's back in 1998, and if things continue going down, that's the level I'm targeting. And yeah, I have to identify that. However, there is still the 17 level, which is a level of importance, right? And now we've got so many levels. Let me do this. That's not good. We've got these two levels here. 17, we've got 11. And then I'm also going to identify this, which is basically just a level of massive level. And if you really want to take it one step further, I'm going to go ahead and identify this 43 level, which is last month's low. So bulls decide to get back in this. That's what we're looking at. All right, monthly chart. We can see the direction. Direction is all the way down. And you can see it by the lower high, lower high, lower high, lower high, lower high, lower high. Now, where's the next lower high gonna be? That's what we're looking at. And this right here is our level of significance. So major demand going on that major demand going on down here. And now that we've seen what's going on in the monthly chart, we need more information. So I think it's the weekly chart. And is there any sort of confluence going on? Yes. Prices below the 6 EMA, prices below the 21 EMA, prices below the 100 EMA, which indicates strong downward pressure on this market. And we can just go ahead and draw our downtrend. Uh, our downtrend, right? But we don't need this because we've got the moving average. Anyway, more information. more information, and we're going to identify the extremes of last week. So it's the previous week's extreme. Previous week's high, and this was almost 32 bucks. And the previous week's low was, check it out, previous week's low was about 20 bucks. So we got about a $12 range going on here. And the ATMA is almost near the 32 level. This is on a weekly basis. And we've got that identified. So what the interesting thing is here is that this market has moved down significantly. 50% the price last within about 2 weeks. All right, so we need more information, but we have the base, and that direction is down. Downward direction, and I'm gonna go ahead and identify yesterday's high and yesterday's low. So this just helps me eliminate a lot of things. I mean, I only need to identify the weekly lows and highs once a week. I only need to identify the monthly high and low once a week. So that's pretty cool. So if we look at this chart here, it's giving us another story. Prices below the 100 EMA, prices below the 21 EMA, and price is below the 8 EMA, right? However, the 8 EMA was challenged 3 days ago. Price came up here and then came back down. Bulls held price down, and then price came back down, and this is where we are, man. This is where we are. So bears, this is there's many ways to play this as a bear. So aggressive bear wants to get in at the break of yesterday's low. That's plan A. Plan A, break of yesterday's low on a short term, take this down to 20, pull out. Other bears are thinking they want this level here to break, and then take this down further to those levels that were identified. And those levels are known as 17 bucks and 11 bucks. You know, this is where we're at with it. This is where we are at with it. So that's plan B. Plan A is sell the break of 23.50. Plan B, sell the break of 22. Or you could just go ahead and sell right now and you stop behind the 6 EMA and see how this plays out. It's about nah, risk to reward doesn't play out. So unless you're going for 17 level or the 11, and those are all just continuation plays. Plan C is if this thing starts to retrace, we have a level of importance here between this 30, 35 level and this velocity high. So this is a selling point over here. That's plan C. Plan B is pull up back to this range, which is about 40 bucks. Um, and then you want to go ahead and sell it for these levels of resistance and then push this back down. So where we at with it? Where we at with it? That's plan D. The plan A is to sell the break of yesterday's low. Plan B, sell the break of last week's low. Plan C is sell the 35 area, which is near last week's high. And then plan D is sell the break of the range, which lasted a few months. I mean, the range has been holding since the beginning of 2019, if I'm not mistaken. Yep. Since 2019, we had this range, and it broke recently. Broke in the beginning of March. So we don't know how bulls are going to play this. We don't know how bears are going to play this. But I have given plan A, B, C, and D long term. And that's exactly how I will be playing this going into Q2. So for the next 3 months, we have direction, we have a plan, and that's fantastic, man. That's great. A man with a plan is a man who can. So what's your plan, man? What's your plan? I just told you what I'm thinking about. This is it. So that's my analysis on the oil market. Oil market is doing its thing, and yeah, what can I say? Oil market is trading at actually, you know what? But it's okay. Oil market is trading at $24.41 right now as we speak on the 25th of March, 2020 at 12 minutes to 4 p.m. South African time. Yeah, right. And now the next market that we're moving into is the NAS 100, yo. NAS 100. Stock markets also took a hit from the coronavirus, and it is what it is, man. Send my regards to all the families out there who have been affected. Send my regards to all citizens around the world to take care, take caution, be safe, and yeah, man, let's practice social distancing. Uh, do your work from home, learn from YouTube, watch YouTube, hit the subscribe and like button, all those wonderful things. Um, right now, let's get into the NAS 100 market. And straight away from the monthly chart, I can just see that it's bullish. All I see is buying pressure, and I'm like, all right, interesting. I've got information. NAS 100. Let's go. So this is the NAS 100 long-term chart. You can see what the NAS has been doing on a long-term basis, and the price above the 100 EMA. Yes, the price above the 21 EMA. No, the price above the 8 EMA. No, the 6 EMA. This is interesting. So we have conflicting data on the monthly chart. However, the long-term uh, trend identifier, which in this case I would say is the 100 EMA, is still very bullish. So what we can do is we can go ahead and that trend line there. Price is still above this trend. We can go ahead and do that. Price is still above this trend. So before I deleted all these lines and show you for them, but now I'm just drawing them again for the sake of going into Q2 with a fresh mind, fresh pair of glasses, fresh pair of glasses. So as we can see, the highest that price has ever been, 9,749. And this was last month actually. And after that, price dropped about 2,000 bucks. And here we are right now. Right now, we are here. And the way you trade any trend is that if you're trading an uptrend, you're anticipating that high to break. And if you're trading a downtrend, you're anticipating that low to break. So this is the previous month's. This is the previous month's high, 9,700. And then this is the previous month's low. Straight to this low. The nice thing is when you're analyzing a monthly chart, you only need to analyze it once. That's either at the end of the month or the beginning of the month or whatever. And you identify your low, you identify your high, and it stays like that for the rest of the month. So that's the whole 30 days that you don't really need to be making decisions because you've made your decisions for the month. And that's why I'm doing this video to identify direction for the next 3 months. So over the next 3 months, we won't need to make a decision on direction. So that's simply just all we'll be focusing on levels where we can get in. Previous week's low, right? We know that on a monthly basis, price is bearish, right? It's bullish, but it's bearish. Bullish, but it's bearish. Bullish in the sense that it's above this trend line. Bullish about in the sense that it's above this trend line, it's above the 100 EMA. However, this thing is still below the 21 EMA on a monthly chart, which is powerful. So right now, I just went down to the weekly chart and same concept. I'm sure by now you guys have seen the simplicity and my methods. Previous, damn, I keep, but anyway, previous week's high and previous week's low. So we've already broken the previous week's low. And that's just like, whoa. It brings up some flags, yo. It brings up some flags. The last week's low was 6,821. Probably worth a previous high. Oh my goodness, previous month high. No, previous month low. And then here we have the previous week high. And then here we have the previous week low. So bears want to smash this low, bulls want to smash this high. It's really that simple. Bulls want to smash this high, bears want to smash this low. I don't know what else to say, man. Bears want to smash that um, 7,800 level. Bulls want to break the 6,600. Although bears have already broken this level, bulls didn't let it go any further because we came right in and jacked this thing up 7,400. And now we're just hovering in this land. And what's happening now is bearish. The pressure is to the downside because price is below the 100, price is below the 6 EMA, price is below the 21 EMA, and that's bearish. I know it's still on this trend line, however, uh, it's bearish, technically speaking. So if we come down here, which is the daily chart, we need to do the same thing. We need to identify our extreme high, and we need to identify our extreme low. So yesterday, this thing hit a high of 7,000, 7,000. And a low of 7,000 bucks. So now it was all up in the grill, yo. The sun is all up in my grill, right? This is what we're seeing, man. And as a bull, we are getting buying pressure. And we know this because yesterday we made a high, and even today we made a high, and price is above the 8 EMA. So if you're a bear, this is how you can do it. You're either trying to play the 21, which would be something like this. This is plan one for a bear, plan A, and you want to hammer it down either to this low or beyond this low. Plan B for a bear is you want to let this come up to last week's low, and then you want to sell it at the top. That's plan B for a bear. Plan C for a bear could be you let it come up, do something like a double top, and then make your sell up here. Although that's very, very dangerous stuff because I mean the thing has been moving up for quite some time, right? But anyway, that's how a bear would be thinking of this whole situation. And now a bull wants this to roll over. Ideally, uh, bulls are going to keep buying until they see resistance. So we broke yesterday's high, which was this here, and then we broke today's high. Let's just slow down there. Just slow it down. So on an intraday basis, bulls would be looking at something like this. Pull back to the 8 EMA. Pull back to the 8 EMA and then take it up. Or they want to buy the break of this high. However, bears are looking to sell here, so bulls might want to be cautious on that one. However, here's how I would play this. I'm going to go ahead and identify this long downtrend. Well, it wasn't long, but you know, it's there. Go ahead and do that. And the price breaks this line, the downtrend is over. And the move I'll be playing is break of this, pull back, up, and yeah, ultimately breaking this level and making all-time high. Uh, so we just gotta watch and see how this plays out. However, we are at significant and respectable levels on this thing for bulls, and definitely want to keep watch. So another confirmation is if price closes above this 100 EMA or above this weekly high, makes a new high, it could be a signal for bullish pressure picking up. We don't know this yet. Um, and we will just on the sidelines until we get more information. All right, that's the NAS market. Ultimately, we're looking for this to break. I don't know how long it'll take, but this is the plan. This is the plan. We've already started seeing bulls coming in here. This trend line. So trend line is being respected. Price moved up and currently trading at like 7,390 something. And I guess it's just a matter of what now. All right. All right. So in another video, I'm gonna look at the currency pairs. So today I've covered gold, oil, and the NAS 100. Uh, this is my bias, my analysis for the next 3 months. So April 2020, May 2020, June 2020. Uh, this is how we're looking at it. And yeah, it's just a matter of keeping our hand on the pulse, our fingers on the pulse. Let this tell us, let it show us what it wants to do. So in the next video, I'm going to be analyzing the pound yen and the euro USD long term for Q2 2020. Uh, it's been real. Thank you for watching this video, and it's your boy Gunslinger. Have yourself a blessed day. Stay safe with the coronavirus, and keep on keeping on. Stay positive. Stay chipper. Everything will be a-okay. Your boy Gunslinger signing off, and yeah, man. And let's be about it.